Price action trading strategies. That's what we're going to talk about today. And as you may have noticed with the thumbnail, it's a part 2 of a 2-part series. And I'll put a link to part 1 in the description below, but you can go ahead and watch this one first. And it is about how price bars are a lagging indicator. Controversial statement. Some people accused me of it being clickbait, but I don't really think that, because clickbait is when you bring somebody in on a false premise where the subject doesn't really have anything to do with the content, but this absolutely does have to do with the content. So let's jump right into it and I'll show you what I mean. What I want to share with you is how volume actually can precede price. So you've heard the old slogan, the trend is your friend until the end. Well, the actual saying should have been volume is your friend, because volume is money, and money is what makes the markets move up or down. More demand than supply, prices go up. More supply than demand, prices go down. Pretty simple, actually. And price can move without a lot of strength. So there can be some retail volume that will actually move the price up, but you don't want to buy that because it's not going to be sustainable. So we're going to use volume. We want to see price action, yes, but more importantly is how much volume or power or money. Again, when you think of the term volume, I actually encourage you to replace it with the term money, because it keeps you focused on what you're really looking at: dollars, euro, dinero, yuan, yen, whatever it is, and money makes the markets go round. Okay, so what I'm going to share, and there's many ways we can apply this. So I'm just going to use one today called the squat bar. Now, this was actually developed by Bill Williams in his book Trading Chaos. So let's give credit where credit is due. It's based on the MFI indicator, or the Market Facilitation Index. And essentially what you can see here that I've got them colored. So they're colored, they're the blue ones. All right, so that's a squat bar. Now, what is a squat bar now that we see it on there? What we're looking for is comparing the previous bar's value, and what we're talking about is the high to the low, the range of a bar from high to low. So was there a lot of price movement from high to low in the bar in relation to the volume that came in? So you could think that as the ratio of the range of volume movement, or a price movement, to volume. So bottom line it is, we're looking for a narrow range bar, just like we have here, narrow range bar, okay, from high to low. Narrow range bar. If you look at all these other bars, wider range, wider range, wider range. This one narrow range, but had a lot of volume come into it. So again, we're not seeing much price change here, right? Very little, but this would be an early indication that we are going to see some price change, because lots of money came into the market, and of course, boom, down she goes, and again, down she goes again. So, but we can catch this, and this is the whole dealio with trading. This is the, I don't really want to see secret sauce, but it is one of the keys to professional trading, is we want to get in before everybody else. So we've got to have an early indication. By the time price has moved, it's too late. Then everybody and their gerbil sees it. And that's the point of really this video series, is as price is a lagging indicator. By the time you see, for example, people trading a trend, they say, oh, well, a trend is a higher high, higher low, higher high, higher low, so I'll buy now. Too late. Everybody and their parakeet sees it. So now you're trading with retail traders, the amateur traders, and if you trade what amateur traders trade, you're going to get what amateur traders get, which is losses. So we just look at this consolidation, and we can short this puppy right here. Now, of course, there's more to it. Do not just trade this one indicator in isolation, but it can definitely be a good tool in your trading toolbox to trade with other things. Now, one of the questions that I get all the time, and it's a great question, is to say, okay, so we're going to buy or sell within this consolidation. Well, Barry, how do I know whether I should buy or sell? How do I know which way it's going to go? Because right now it's just consolidating. And that is an excellent question. And my answer is, for me, and again, there could be different answers here depending on your trading system, but mine is I trade in the direction of the momentum of the next higher time frame. So I'm using the energy of, and by the way, a lot of people will say, oh, trade in the direction of trend of the next higher time frame. And that's foolhardy. That's not a good idea because trend is always a lagging indicator. Talking about lagging indicators, trend is always a lagging indicator by definition. It has to be. Maybe I'll do a video on that sometime. So think about that. If I'm going to trade, let's say, well, this is the weekly chart. So let's say I'm going to look at the longer term chart, so this is daily. I'm sorry. And then if we're going to look at the weekly, the longer term chart, then if you can use confirmation of trend on the weekly chart, which is already a lagging indicator, and now it's 5 times lagging because there's 5 days in a week, well, there's really no correlation whatsoever. So what we want to do is use something that, again, is going to help us find, okay, which way is the money moving, not just which way price has been moving, because that's all trend is. Trend is the direction that price has been moving. We want to know, as traders, where is price going to go in the future, into the unknown future on the hard edge of the screen. So we got to look at the money. Which way is the money coming in? Is it buying? Is it shorting? Or is it just balanced? If it's balanced, supply demand, we don't take any trades. So when I look, so I'm going to look at momentum on the weekly chart. If momentum is bearish, then I'm going to short this. And that was the case here. And down she goes. If momentum on the weekly was bullish, well, then I'd be looking to break out to the upside. Okay. And it's not quite that simple, but that's how I decide direction anyway. That's that aspect of a question I get a lot. Now, the next question, of course, would be timing. Well, how do I know when to enter? So in other words, let me clean this up a little bit. And this is so critical. Well, okay, so here's our squat bar. And you may say, well, okay, so should I go long or short right on this bar? Well, that's where cycles come in, and cycles help you time your entries. So I've got a recorded presentation I'll be happy to give to you for free. Give you my market timing indicator, absolutely free. Show you how to set it up on your charts and also how to trade it. So that's a brief little webinar recorded. You can watch it anytime you want. And that's my gift to all my viewers. Also, by the way, if you have any comments on this, or if you want to know which indicator I'm using here, this is TradingView. I'll be happy to share that with you. I'll just leave a comment below. Just leave a comment below if you want to know what that indicator is, and I'll tell you which one I'm using. There's several different squat bar indicators you can use, but I'll show you the one that I've got here, and I'll even give you the settings, because I changed the settings, but just put in the comments. I'll respond to your comment right in the comments below. All right. And subscribe to the channel. Love to have more subscribers. That lets me know that you guys are enjoying the videos. That encourages me to do more videos and give you more free content.